Hello there and welcome to another episode of Behind the Data. I'm Alistair Hope and I'll be taking you through some of the things that have been moving the gas and power markets through the course of the last month. So if we look at gas first, you can see on the chart that there's been a continued bullish move, upwards of 40% on the 4-month contract, driven still by lots of fear for supply for the winter. Storages in Europe are very, very low, particularly the Gazprom controlled sites, and we're just not seeing the same sort of Russian flow come through into Europe that we've seen in previous years. On top of that, there's been a lack of LNG coming to the UK and to Europe as well, thanks to high Asian demand, with a lot of the vessels from Qatar and America choosing to head to that destination instead. A lot of how the winter outturns is very much going to depend on the weather. There is a huge variance in residential gas demand depending on whether we have a warm or a cold winter. So all eyes will be looking at that moving forward. If we look at power now, you can see on that graph that we've seen a very, very similar increase, upwards of 60% for that front month contract. Where gas goes, power is going to follow. So it's not surprised that power's moved upwards as well. But what we are seeing is some concerns starting to build up regarding supply margins, with a number of gas and nuclear generation stations offline. And if the wind doesn't blow, then we start to have to call on some really sort of traditional dirty generation to come into the generation mix to help meet demand during those peak hours. So moving on to carbon then, you can see on the graph that there's been moves from the start of the year upwards of about 80%. But over the course of the last month, we haven't seen that continued drive up within the emissions market. It seems to have almost decoupled from the strength that we've seen in the gas market, and sort of is trading roughly range bound between sort of 62 and 64 euros a tonne. And then a quick look at oil. You can see in the graph there that from the start of the year we've seen moves upwards of above 50%. At the start of the year there was an awful lot of concern about demand moving forward, and was there going to be that buying interest there. But as the economy has started to improve and things have started to open up again, building has started and people have started to move more. So oil prices have started to drift back upwards now, just touching $80 a barrel last week. But there is still quite a bit of concern about demand moving forward and whether OPEC Plus can increase their production in line with the quotas that they're being given. So yeah, that sort of pretty much brings us to the end of this update. Obviously, it's a little bit of a scary time for gas and power prices. Is this sustainable? Is this the new future? It's very, very difficult to say. But if you do have any concerns or you have any questions, then please do pick up the phone and get in touch with your account manager. Thanks very much, and I hope to speak to you again next time. Cheers.